All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for March 14th, 2023. We'll start with the weekend, not weekend, the swing trading portfolio. Sorry about that. Hey, so I want to start with a special one on KRE. That is the uh, regional bank ETF. So first, I just want to zoom out for a moment to the daily. All right, so that's what the last 30 days of this thing looks like. Um, it had an extraordinary sell off. Come on, pen. Can't we work here? There we go. So, this was the beginning last week of 3 horrible days of selling. And then today was a little bit of a gap up and then a collapse further. So, extreme volatility. Now, what we did yesterday, let me get to the 30-minute. On the 30-minute bar yesterday, what we did was this. We saw that was the big gap down, and then it recovered and then finished here poorly. And so in the last hour or so, we took a short position expecting reasonably more selling with a tight risk box here. What we got was a gap up and then a harsh sell off all day. So that adverse gap, instead of being +1, where we were at the start of the day, at the opening, we were -3, -2, -3. So that's on a a position sizing risk box of this much, from 45.50 to 46.50. So it was a $1 stop. So if we had $400 of risk, we'd have had 400 shares. And then at this point, we're -3R. So that would be -$1,200 right at the opening. Okay. So keep that in mind. Now, as I said last night, this was going to be my turbo trade for the day. So here's what the turbo trade looks like. When you look at the turbo or at the swing position, this was getting short around 45.50 right in here, with about $1 risk. We were +1R in hand, then a gap up to here. So now we're about -3R. Now, you could make a decision to exit there. What I did was wait to see the 3-minute move. It then broke the OR3. So now what I'm doing is I'm taking a turbo trade short with this much risk, which is 1/3 of the size of the overnight risk box. So this is the MMRB. And let's call that 30 cents, because that's what it is. So with $400 on a 30 cents per share, that allows me to have about 1,200 shares. Whereas this one is 400 shares. Now, the first move down was this one, and then exiting at the RL10 crossing the dragon. That yields a 3R win. And that's 3R on 1,200 shares, but it's 3R on $400 of risk capital, because the amount of dollars at risk on this trade is the same as the number of dollars at risk on that trade. So at the moment of exiting here, what you have is +3. And from this trade, if you get out here, you're at -3. And so this would be a wash. That's if you sell this. However, if I stay in that position because I'm hedging it with an additional trade here and it's moving in my direction, I'm actually only down 1.5. Or maybe 2. I guess that's 2. Then when this rolls over again, and we got a collapsing dragon here, now we're short first position, second position, third position on 30-cent risk box. This trade is 1, 2, 3, 4. This one is 2, and this one is 1. So now we're on this trade, we're at 7R, and when we exit at this one, this trade is now at 0. Then it breaks another short on the, here's the PSAR flip and collapsing dragon, 30-cent risk box. That's probably 1R. So what we have when it closes here, the swing trade is actually +1, and we picked up 3, 7, and 1, 11R from the day trade on the 3-minute bar. So the turbo trade picks up 11R on the same $400 of risk that this one started off -3 and then ended up being about +1. So that's the difference between position sizing against the overnight manageable risk and position sizing on the intraday management of risk. And in both cases, the size of the box has to do with what is the price that tells me the trade is not working. In this case, the swing trade was telling me, look, if this is going to fail, from here, if this is going to fail, I'm going to look for a price that takes out the previous RL10 peak. If this thing is going to fail right from the get-go, it should just keep going. And then I was taking that much risk against the possibility of a gap. But huge gap up, all you need to know is that it was a huge gap. A huge gap from a close to an open, if that's a large gap, then what you have is simply an increased probability of a large move in either direction. So that comes back to the decision I make in the first 3 minutes. Let me pull this down a little bit. And that is, what's the OR3 doing? The OR3 is here. If this starts going up here, then there's indication that it's going to go. So I can exit this and take the 3R loss now and then play this one long because this is the most likely symbol in my whole deck that's likely to make a big move. So I want to be on that trade. Just take the 3R loss and be done and then trade the next best thing going. It just so happened that because after just waiting 3 minutes, there's an indication that it's failing. I don't have to exit that one. I can wait for the first 3 minutes to decide whether or not to take that exit or not. So that's the connection between turbo trading and the hybrid form of trading with intraday on 3 minutes and then the overnight risk on 30 minutes. The wider stop relatively is a function of what's the fact that there's no gap. Okay, so I wanted to make that point. Okay, back to the just the generic 30-minute bars now. All right, so Alcoa. I guess the point I would make is that once you adopt hybrid trading, uh, it really reduces the risk that you feel from overnight holds and swing trading. It really does provide a solid base of support. Same patterns, all fractal. All right, so Alcoa, we didn't trade it yesterday. Today it rolled over, made a PSAR flip, so I'm short, and we're holding a fraction. And here's my risk box. So short Alcoa. Caterpillar, also short. That one's holding a fraction. It had a big run up in the last 30 minutes. I thought really hard about exiting, but I was willing to hold that one overnight because the indication on this one is still down. Like what happened? What happened in the last 2 days that makes me believe that Caterpillar is going to go along with the rest of the market? Not much, so I'm willing to hold that one. Cliff, nothing. This started off stronger than Alcoa, and it is less. It is moved less by the market than Alcoa. So Alcoa was the one that I chose to hold overnight. This is CVS. So yesterday we got the collapsing dragon around noon and rode that down to here. So it was +2, and then it opened today and just kept selling. So put the second position on. It also had a nice little run up here and gave back that much. So tomorrow my stop will be at the PSAR. If it violates the PSAR, then I'm out. But we're holding 2 positions short with a nice buffer in hand. The Dow, I just observed it, no trade. Devon Energy, this was a 1-day intraday break of that little box. This is a collapsing dragon. I took the 1, 2, 3, and then no overnight risk because I wanted to have some reduced exposure overnight, having been burned by regional banks today. EA was a continuation. So that was yesterday's little 1-day bump, and then a re-entry today when it did not fail, but started going up and enjoyed. There's the dragon horns. Take the exit here for +2. No overnight risk. Emerging markets, just observing, stalking. Mexico, stalking. Brazil, tried this one at the close yesterday. You will recall we got short and it closed well. Today it gapped up and gave me the 1 hour loss. It then rolled over, and I re-entered the short here, and we're about I would say +2 on this one and -1, so we're net +1 and short overnight on Brazil. That closed really poorly, so that one I'm feeling good about. Intel, along, the semis have just been resisting the urge to sell off. There was it broke through the PSAR at the open, so just held my nose, took the standard risk. It had a nice run up, and this was about 1, 2, 3 at the peak, and it gave back 1.5. So we're about 1.5 on this one. And oh no, I'm sorry. It ran all the way up to here. So we're actually just about +3, and I'm going to be ready to add another one if it breaks above this is the 10-day high, and I'll have 3R in hand, so I like Intel. International paper. So this one, yesterday we got short here and held it overnight. Today it gapped up. I took the exit, so -1. Then it rolled over here, so I took the short and then cashed it. It came down and started coming back up, so I cashed it for +1 in order to just make that whole thing a wash. Revenge trading. So flat on IP overnight. IYR, We started this was the PSAR flip yesterday, standard risk. It closed well today. It moved up nicely, came back to the edge of the dragon. I was happy to take +2 and no overnight risk. Again, I was mindful of how volatile things were with KRE. KRE, you've already seen. We are still net one short. Net one short from in here. Basically, it's the same. It's the same swing, and that's the move where we got +11. So the short is still from the original short, and still got the same risk box on it. And if it breaks below the 10-day low, I'll add. That's going to be my primary target for tomorrow. Marijuana initiated the short when the market, it gapped up and rolled over. Took the short, standard risk, holding about half an hour, and it closed near the low of the day, so that one feels like it could collapse further. Same with no, I'm sorry, my bad. I was thinking PBW. This one we actually got out of and cashed about half an hour. I decided I was going to keep clean energy instead. Sorry, can't read my own chart. This one is this was a gap up and then started to collapse. And so this is holding +2, and it's below the dragon, and I think there's more pain and suffering coming. So we held that one overnight. Rivian, yesterday I mentioned how dumb I felt for missing 2 days of continuous grind. So when it started selling again today, I just put the short on and just watched it grind down, and I'm happy about that one with standard risk. That's holding about +1. Treasuries just stalking. I am starting to feel better about this one as a compound critical state. I think if I was going to do that, I would be here short or here long on the intraday. Then if it broke out of that box, I think this is where we could add. It would become a swing trade if it gets out of that yellow box, but I would try to start it here or here, depending on how it moves from the opening. The more likely one is down because of how poorly it closed. And then the target would be back here at the 5-day low. But I would rather trade the banks because their directionality is going to be a lot larger and easier to see. Tesla, you'll recall we initiated yesterday on the PSAR flip. I took a wider stop. I mean, I could have had twice the position size, but I'm mindful of how volatile things are. So we took a double wide. It closed well, and then today it closed well again at the top of the day. And so on this move here, we're holding +2, and it has importantly cleared that previous resistance level. So the next one is this. Oops. Looking for 192 tomorrow. And then finally, U.S. Steel. Initiated the short on it. This was the gap up. Here's where it closed. Here's the gap up. And then started selling immediately. Standard risk. And it also rebounded to close here. So we're holding about +1 with that original stop in hand. And we'll see tomorrow if that's going to roll over and collapse, or if it starts coming back up, I'll try to get out of it before it goes negative. All right, so another day of high adventure in volatility land. This is living the trade of KRE. So when you zoom in on the 3 minutes, This was where um, the KRE short was. There's your $1 of risk. And it closed here, but then it gapped all the way up into here. There's your OR3. Then it closed here, and then the next one started failing. So there's the 30-cent risk box. There's your standard exit when the RL10 crosses the dragon. So 1 unit of risk, that's 1, 2, plus 3. It rolls over again. So just re-enter here. 1 unit of risk. Second position on 2R battle drill, 2R battle drill. Standard exit on a 1, 2. And again, this first position gets 1, 2, 3, 4, 5. The second position gets 1, 2, 3. Third position gets 1, so that's about 9. I think I said 7 before. I'll take either one of those. And then the re-entry on a single position. And then I exited the turbo. So the turbo trade, which is this one, with that same 30-cent risk, remember 45.80 to 46.10, that's 30 cents as compared to the full dollar. So this gets 1, 2, 2.5. And now this thing, the intraday trade pays for the overnight risk, and so I'm just still holding this. And what it comes down to, again, was this decision in the yellow zone. Look, if you decide to exit on that, that's fine. But if you do, there's your short, and now you're still going to get. It's a question of if you're going to take the 3R loss on the swing, and do you still get the 11 that was available here? So those decisions are related, but it comes down to thinking on that 3-minute time frame with the OR3. All right, let's gotta find the traders here. All right, here's this is Arch, and he's trading the Aussie dollar US on 5s. He notices there's a COTA 2, another COTA 2, another COTA 2, another COTA 2. The PSAR protects, because here's the RL10 the whole way. So the PSAR stop is good. It doesn't get triggered by the noise. He notices the rollover. He plays the excursion. There's the PSAR flip. He waits for it to break out of the river, trades this, cashes +1, and is content. And I don't disagree. Here's a COTA 2. There's another COTA 2. There's an emerging dragon. Here is a collapsing dragon. What I like is this down, up, and then down. So you get the lower highs. So this could be short, and you probably end up scratching. Then this collapsing dragon probably pays you. So there was good movements on the Aussie on the 5s. Here's my brother on Western Alliance Bank Corporation. So he's not doing the 2R battle drill on this one because he's not familiar with the symbol. So he's just doing pattern recognition and prepared to trade. So he gets the PSAR flip, and it collapses here. So he gets a standard short, second position intuitively, and then 1, 2, 3 out for 8.9. He gets the PSAR flip, Doesn't take the first one. When this starts breaking down again, he gets the second and or his second trade in the series. 2R battle drill. Everything out for 9. So that's about 17.8. Check your math. Oh, 8.9 and 9. Okay. Yeah. 17.9. Trading the volatility. You know, in the creativity check-in lesson today, we were talking about, the lesson was examining the intuitive trader. And some of the big ideas that came out of that was that, intuition is resting somewhere in your unconscious or subconscious. And it is the sum total of, your heart, your gut, your hands, and your feet, but it hasn't been formalized yet in your head. But it's the, so you got some number of thoughts banging around in your head. Your intuition, given a little more time, would become a thought with the power of your rational brain in your head. So this is still trustworthy, but as we said in the session, trust but verify. And first things first is be safe. Don't trust your intuition to the point where you take risks that your head wouldn't support. So there is position sizing, and the knowledge of your gut and risk aversion tells you what's safe. Position sizing keeps you safe. Then that keeps you in the game long enough that you can have enough trade results to verify whether the intuition is it adding value or not. So trust but verify, but first be safe. That's why we say in true storytelling, the preconditions are safety leads to trust, leads to telling more and more truth, leads to transformation, or the opportunity to transform. But the first precondition is safety. Safety first. And that's what professionals do. The difference between a pro and a hobbyist is that hobbies dabble and pros prepare and start with safety. Safety first. So when we're going to go in and work on some power tool, on a drill press or a bandsaw, the first thing we do is establish that thick OSHA safety box, and you check everything else at the door. Nothing else goes in there, and then you are ready to work on the power tools inside the safety frame of a professional. And then that leads to results. Safety first. Woj did professional work today for 5R. He gets the first rebound and preserves a half in Devon. He gets the collapse in U.S. Steel for 1. He gets a scratch, then a stop and reverse for 3.2 in the Euro Aussie, and then takes a bite out of NVIDIA for 0.4, and that's 5.1. So he's got an energy, a semiconductor, industrial metals, and a currency. Pretty good diversification in a group of 4. Really nice work. Alrighty, let's get to Sideways normal, still pain and suffering in the short term, the 2-day and the 10-day look back. Volatility rising, warning us about risk off. The risk Z is starting to collapse. Almost no long side swing trades anymore except for emerging markets, which is the strongest remaining index. ExxonMobil, Merck, Nucor, Caterpillar, Chevron, all pain and suffering there on the max pains. Lots of auto framers. Well, one breakdown here on IBM. Intel remaining strong. Microsoft remaining strong. 3 5DDs. That was IBM at 2 to 1. 3M at 2.8 to 1. And Pfizer too close to the 10-day high to frame out well. Big winners today. Percentage-wise, Intel, Microsoft, NVIDIA, Tesla. This is all your techs. This is U.S. tech. ETFs. There's your NASDAQ tech. There's your S&P tech. Gave back a little bit in gold and treasuries and oil today. So not surprised if we see more weakness in Devon Energy tomorrow. Lots of auto framers. Only a couple squeezes, Walmart and Tesla. I like Tesla for tomorrow. Watch that one right out of the gate. Lots of Godzillas, enraged. Those double greens, that's an enraged Godzilla. There's Prudential, Financial Services. Lots of banks in there. None in our tactical symbol set. The volatility is everywhere. The 1-day movers, look, there's a 9 sigma move. That's a bank. Yes to my brother's question. Standard work here in the sniper and the auto framer. As usual, we are ranking it by the reward to risk ratio. And that is, if you take today's range as your R and say how many R's is it to the 10-day high, that reward to risk ratio is expressed in this column. So lithium and finance, no surprise, 4 to 1. So all the things at the top above this blue line, these are better than 2 to 1 reward to risk. And these are the ones that are, these down here are the ones that are closer to their 10-day high. So all of the semiconductors are pretty fairly valued near the top of their trading range, as is tech. Tesla still has some room to run. It's above 2 to 1, and it's a better value than the S&P, which is a 2.4 to 1. But now you got your metals, U.S. Steel, Cliff, Alcoa, and you have Devon Energy. So I've got plenty to choose from tomorrow out of those 5. The metals, Devon, and Tesla. I wouldn't be surprised on Intel to see that continue to go, though. If we get a good day in tech, watch the semis really start to go. A reasonable set of recoveries and rebounds. There was a little bit of recovery in the biggest banks. JP Morgan is better than Goldman, though. JP Morgan. That's the safest one, looks like. Intel and Microsoft, two really strong days. Tesla, very strong day. Inside the ETFs, Treasuries gave back some of their good run. Here's all your techs and your cryptos are quietly getting it done. And then finally, in our trading value list, we're looking for things that have large daily range percentages, that's intraday volatility, and strong consistency with high frog quality numbers. You multiply those two columns together, you get the trading value ratio, we like to call it. And then the one that has the highest combination of strong consistency and large ranges moves to the top of the list. Tesla, clean energy, Nvidia, Devon Energy, marijuana. What else do you need to know? I like that Intel's moved up on that list to the 8 slot. That's pretty good. All right, brother of mine. Today, do you need this recorded?
You may want to. Yeah. I mean,
Okay.
because you can always.
Are you
You can
sharing?
always.
Are you going to share your screen?
Yes, sir.
Okay.
So, I had a buddy of mine call me today on that WAL. I was actually working on verbiage of the book and some rewriting of some of the class materials. And he calls me and he goes, "Hey, WAL is up 50% today, and it's a regional bank group."
Yep.
I'd never heard of him. I said, "Oh, I'll go take a look at it." And we're jaw jacking about the banks, and so I said, "Oh well, let's see if I can, get after it." Yeah, come on, you. I mean, sorry, guys. Where is my TC 2000? Oh, decided to quit on me. Awesome.
As it will.
Yeah. Just one moment.
Is that an S&P 500?
Really? I just went to
It
I
is
just
not.
I just typed it in.
Okay.
I think it is an S&P.
No, I just checked. It's not.
Okay, can you guys see that or no? How about that? Am I working here or no?
Not yet.
Screen share. There. Okay, how about now?
Gotcha.
Okay, so he calls me up. I was working on stuff and things, and he go. So literally, all I did is I went over to I think it was just S&P 500, and I typed in WAL, and it came up, and it was like, holy smokes, this thing's up 50%, right? So when we look at what I actually got out of it, I got two big pieces worth of about a 30% move in this stock. So when we're talking about sometimes just going outside your normal realm, how do you find a mover? Well, it can be as simple as that, as a phone call, or hey, you know what? I'm gonna go look at the S&P 500,
And sort
right?
it by
Yeah, I'm just gonna
percent
sort it by
gains.
percent change. Oh, FRC, what's that? I don't know.
Same thing.
Okay, that's same thing. But then I had, like I said, I had WAL. So then I'll also go and if I'm in the middle of my day and just say I have my favorites up, and I'll just my flags, the things that I'm looking at, it's still up 22%. So I like reversion trades,
Yep.
and I say, okay, well, some of these guys are gonna, some of these guys that were in here and bought it all the way up there, some of these guys are gonna want to cash this. I
They're
know
very.
it.
It's you always ask yourself who's motivated.
Yeah.
The guy that's
Agreed.
hungry or the guy that's trying to carry home the whale to his family.
Yeah.
It's like the old man in the sea.
Yeah. So if you guys are looking for movie, I mean, you could have played, I don't know, Meta.
Yep. So anyway, here's another point that came up in our the creativity check-in session. We were talking about the difference between being an unplanned versus unprepared trade.
Yeah.
And my contention is that if your patterns are really very simple and you know pattern recognition like the
Yep.
sniper patterns,
Yep.
it's much more important to be well prepared than it is to have a formal trading plan for each and every symbol with all of the price levels. Now it's good to have them, good to have
Yeah.
that frame of reference, but at in the heat of the moment, if you are prepared to trade, then that means you know what all the minimum essential information is, and that's what's the size of my risk box, what is the high and low of the day, and where is the trade location, and then that simplified sniper setup tells you
Yep.
everything you need to know. You got a PSAR flip, and it broke out of the dragon short
Yep.
in both
Yep.
cases, and that led to almost 20R on a symbol that you hadn't
I don't
ever,
even know.
you weren't prepared or you weren't planning to trade it. But the framework and the
Is there?
TC 2000 bundle and the sniper rule set allowed you to quickly frame the trade, and that's all you need for a plan. Your plan is simply saying, does it fit within the box? Yes.
Yeah.
Okay. Now I'm prepared to trade because it's every rehearsal that you ever do, every successfully executed pattern on any live trade is also a rehearsal for the next one. So if you think about this trade that you're looking at there, he rehearsed it, he traded it, he reviewed it. He's getting 3 bites at the apple to reinforce the primary insights and triggers for that pattern. That
Yep.
makes you prepared for the next day. So I would rather be prepared than planned. I just need to have a marginally good plan. Like, here's my plan for tomorrow. I think the regional banks are going to be moving. I think
Yeah.
the I think the semiconductors, especially Intel, could be moving. I think Tesla could be moving, and I'm ready to go in either direction on those. I'd
Yep.
prefer to get Intel to the upside or energy to the downside or wherever the regional banks take me. That's my
Yep.
plan.
Yep.
Now I'm going to be well prepared by reviewing my minimum manageable risk boxes, looking at the swing trade portfolio to see which ones I have to protect or exploit tomorrow. And there's a handful of those. And
Yep.
that's my trading plan. And then I'll be prepared and then I'll get a good night's sleep and be ready to trade in the morning. Hey, so I'm
Walking
going to
through
try
the,
to. What time is your meeting with the book guys tomorrow?
it got postponed till next week. So
Better yet, because I
yep.
still got more to do. Good.
Cool. I
I was
I
feeling guilty. Now I just feel ashamed.
well, no, dude, if I wanted you to feel guilty, I would have told you it was still due tomorrow.
Yeah, I know.
I do suggest or something to play with
Yeah,
is I went on the what is it, GDPAI
yeah,
thing
yeah,
chat. It's pretty impressive. It's
yeah,
pretty impressive.
yeah.
So
I got to keep my own voice in this thing. Hey, so what I did
yeah,
was what I started with. I think it's going to win. Is I think he liked the style of the sniper rule set, clean, bulleted,
yeah,
direct. So I'm rewriting the backstory in that tone, and I found my copy of the hybrid trading job book. It
yeah,
has about the top 30 or 40 concepts. So I'm
yeah,
going to write a couple sentences on each one and just say, look, here's what the ecosystem contains and what we're going to teach you and the biggest ideas. Then you'll see 3 examples of actual systems that we're using. And then here's where you get the Cornell notes to explain that stuff in greater
awesome.
detail, along um, with the glossary, and then I think that gets us to 100 pages and done.
Yep,
But I'm gonna rewrite the backstory in that kind of style, and then I like
yep,
the success principle from the Heath brothers book called Make It Stick, and
Yep.
success meaning simple, unexpected, concrete, um, convincing, um, and then let's see,
Yep.
there's the other E,
Yep.
emotional story, emotional connection to a story. So it'll
So
be that.
what I wanted to say here, so just thinking through, I know we're kind of jumping around a bit, and this is more my way of thinking than Ken's way of thinking.
Right.
It's circuitous, but so when I was looking at this, it yes, it flipped, but
Monkeying around.
it was a monkeying around, and then it went up, didn't break the middle of
Dragon.
the dragon, and came back down. That's when I got in. Okay.
Failure
So
to
then
follow through is information.
so then the next one, it moves down, but then it kind of plateaus for 20 minutes.
The shelf.
Moves out. I'm saying, okay, that's good. Then a little bit of a late fill.
Then a
So I still got it.
Yep. Yep.
Then it goes down and then it hits a doji. Because I was desperately trying to, and I could not get another position here. Because I saw another shelf with a doji.
Yep.
Couldn't get a position. Then it goes into a doji and then it jumps up. And I was like, ah. So I sold. It came down a little bit. Good for me. So if unlucky here, lucky here.
It nets out.
Yeah, it nets out. So then we move along, and this thing, it was Mr. Frog's wild ride in here. So this, when you guys maybe look at that thing unzoomed in, you might say, well, that doesn't follow any rules. Well, it followed my rules for the moment because this was just all over the place.
Yeah. Now look at the original PSAR flip dot at 140 or 135. Where go south. Yep.
Yep.
When that level breaks, that's your collapsing dragon off, because that's also, remember, it's
Yep.
important that that PSAR dot is drawn at the same place where the RL10 maximum excursion gets to. That's the price level that when it breaks. Then when you go over and look at 215,
Yep.
that big bar expansion is the one that breaks through that, and then
Yep.
the next bar,
Yep.
yeah, then the next bar, the last bar that you see, yep. And now,
Yep.
now it comes back to the dragon. It starts to fail. This time, it doesn't even get into the dragon.
Well,
Easy short.
Yeah, that's where I took it.
Yep.
The other thing I was trying to lead a little bit to Archer. I wanted him to start looking at the 9-day on the Aussie dollar.
Yep.
So
that's money in the bank right there. For
yeah,
that's like 100 times higher time frame, but it's all fractal.
Yeah.
And you won't miss any big move in the market if you're looking at 9-day bars. But that's enough of that. I got to get this published and processed.
Okay.
And be ready for the morning.
Yep.
Take good care, brother.
Good night, everybody. Ciao for now.